I thought it was just broker's account.
I needed a rubber.
Oh well.
You're that forgettable.
Yeah, when you lose a guy 60,000 on a single trade,
Six.
Right.
Oh.
I was trying to.
Oh, okay.
Yeah, average farmer. You know,
Well, and that single trade was 3,200.
30,000.
I made him money though, let's be honest.
Can't say that. Can't say that.
I did.
Can't say the risk. Can't say the rewards without mentioning the risk.
No, I made him.
That's
I
also
made
not
him
indicative of
$1.50 on his.
It says results. Future
Unless it's not true.
Performance is not.
If you never
not
lose a
indicative
guy
of
money,
future
then you don't have to
results.
say it, right?
All right, let's
I've never lost
get going. Columbus, are you guys on? Bueller.
Still too bad Rubber doesn't have an extra trade
Um,
shirt on.
you know what, And we mentioned this in the comments, the weekly and stuff, but I mean, Tuesday is really always one of the biggest reports of the year. I'm still hoping and this would have to be prepared for next week, but I really think, and I just say, let's just concentrate on the economics of the deal, right? We have lower prices. Are we going to lose overall acreage in major crops? And, it's a very small percentage to end up having the total corn and soybean total acreage. It's not a big deal to have that down 1.5 million more than what the market's expecting. Is it? And I think if something like that happens in the big picture, it's not a big deal. But the market could go, boop, right? Have a little pop. So, the one thing I really want to encourage everybody, and we'll talk about the rec sheet and if we want to put anything else out there. And some of them might be some reasonable wish lists. And I know we've talked about reasonable targets for upside in beans and corn, and some that didn't get too close, and some obviously have gotten in the last few months. But I think, the question is, let's just say the report comes out and corn does a run 10 cents higher, 20 cents higher, and we don't actually get up back close to that 440 high. I mean, I just, in this year, when we think good growing season, doesn't really matter if the acreage is down a tiny bit. I think we're still looking at a low at the level or lower than last year, which was 318. That's just a good side scenario. So why not make sure we at least have a put underneath everything for people? You'll get some more corn sold, beans sold, whatever. You'll get get some other sales if you got targets up there. Why not make sure that decide later or delayed floor that we just look and make sure we have some orders out there. It's a long year ahead. That's just an easy, no-brainer thing to do to protect people. And a lot of it might be potential to make 40, 50 cents if the market tanks and everything's good for and spend less than a dime to do it. That type of scenario. And I've mentioned this before. Over the last 4 years, this is the trend we're in. We're still in a trend of growing global supplies. Until that changes, you should always expect the seasonal harvest low to come in. And you follow me? That's the overall global trend. It is what it is. This is not a Dave Fiala call. It's just saying, I'm just being a realist looking at the market, and this is the trend we're in. We're close to the point where lower prices should discourage production, right? And until we see that, it might not be till next year. Maybe we'll see it on Tuesday. So you follow me? It is a big report just to identifying a change in global trend and domestic trend in terms of what we're doing to produce. We obviously always have the uncertainty of weather, but you know what I mean? Where that's just that knob. I don't expect that knob to be turned this year for sure. I think by next year, and if we end up going down again, it will be changed in 2016. You follow me? So we could be in the same price range or the lower, next year. And I'd be say probably maybe now's a year not to do it. Hold off getting puts underneath everything. But as far as the last 3 years, the markets went a buck lower than reasonable puts. You have an opportunity to buy in this time frame. It's what happened. I mean, we were flirting with 6 and we ended up going below 5. We were flirting with 5 and ended up going below 4. And this last year, flirting above 4, we almost went to 3. So, and we are at least in this area. If we were at 380, we'd not be having this conversation. I'd say that's correct. There's too much upside potential with weather and less acreage if we were there. You know,
So you-
meaning if we'd be at 392, which was the low that we had a week and a half ago, if we were there, I wouldn't be saying, let's make sure we get these calls. You know what I mean? I would think, screw it if we're here or lower, let's hold out for a little better prices. But it's still a matter of this range argument and this 50-cent range that we've been in the last 4 months in December corn. So I just think if we're up there in, why not try to get a put on? And I just, the thought would be is if that report comes out, let's say it's friendly, vol will get creamed in those puts right away and maybe we can get some bought. So it's still, I'm not saying go and spend the money for sure, but I always say this, you know who makes that final decision? You should have this conversation with the client. Some people will do it, some people won't, but have that, say, look, this is what we're going to spend. Here's the risk, you know, if weather's good this year and we don't do anything else on these bushels, and not that you can't do it with your own LVP idea too and do more puts. But, you know, the thought would be, if you get bought right, you don't have a lot of risk and you can bail on them around the June acreage report or 4th of July if you feel like weather's taking us down from trendline yield and there's no risk of bigger downside. We can pitch them. I don't think you have a lot of risk between now and July 4th. And when I say a lot of risk, if you buy an option for 10, you got 4 cents risk, 5 cents risk in it. Or if you buy an option further out of the money for 4 to 6, I mean, you got 2 or 3 cents risk. You know what I mean? So it's an important time just to get organized and say, look, this by all means is not a big call at all. It can pay big dividends. Make sense?
You're saying have the order for if the report friend. You're
Just
not
have
saying
a
buy
report.
ahead of it.
We'll look. I'm just saying we'll start talking about this and having some different order ideas, and we may tweak them every day over this next 3 or 4 days here. You know, going to the report. But we're just saying if say an option's at 10, we'll be like get orders in for 7.5 for this put. We might change which strike it is. Does that make sense? As more of an LDP type strategy, but you know, and this just goes back to some of the work that Clint did with the cost analysis in terms of a price range perspective. You know, that makes perfectly good sense with the fundamentals we have. 450's high, 302 or whatever it was like 298. I mean, whatever. But and we're saying, look, we're identifying over a full dollar downside risk in December corn. And it's obviously normal to above normal weather. Is that worth? You know what I mean? The risk reward is, whether it might be 3 cents to 8 cents in options. The thought is that you make a buck, and that buck's going to mean a hell of a lot if we're looking to capture grain prices again around $3 or lower, right?
Yeah.
It's going to mean a hell of a lot. And if we have some weather issues and we end up getting some opportunities at $5 corn or better, who gives a shit about 4 cents and 8 cents or 2 cents or whatever it is? So I just think this nice little bounce, at least we got a better opportunity. It's that conversation to have now. And the customer doesn't want to do it, they don't want to do it. But just say, look, this is what we're looking at. Does that make sense? So I don't want to just concentrate on corn and not beans. I mean, you can pick out some options in beans. I haven't been as strict on those, but because they look like shit because they're down low and they're too expensive. You know, but then in the beans, then it makes more sense to sooner get a little more portion sold if you're not there, and roll the dice that way. You know, because you always have an opportunity. You got South American weather after U.S. weather. I mean, that's what's great about the markets. I mean, we're always going to have opportunity, right? Just like a Cubs fan, there's always next year.
To add to your thought, most trends, whether it's a downtrend or an uptrend, before it's actually over, you have this kind of correction you see, then you have that final last puke. I mean,
You're saying we're having the last rally before the puke?
yeah, I mean, before it really ends, I mean, you see it all the time. So now, if we were sitting here in August talking about this, it wouldn't be quite as valid. But we got 3 months for this market to puke with good weather. If good weather shows up, to continue the fundamental trend is still in place. Pretty much. I mean, it's hard to find an argument that says it goes above 450 at this point. So, I mean, it
Says it could go over 450?
no,
Oh.
yeah, that it can go over 450. Even to get to 450, it's hard to find a fundamental argument.
Oh,
So
right.
it's,
Well, it'd be weather. mean, it's weather. That would be it, but it's not here. So, then the question is, do you just get the puts on or do you wait and try? I mean, I'm trying to be swing trader savvy in terms of, hey, this could be just a little yin and yang, but that's still pretty big speculation. That's a pretty good, what I'm saying is a really good opportunity or a really good deal that I think that could show up right after the report. That makes sense, doesn't it?
Would you buy the fall Decembers or like short
And
days?
the same argument, I'll answer that question, but the same argument also goes from the stocks. Because between the crush and exports, we've killed it from a demand perspective in beans. And with corn, prices have been cheaper, so I think you still could end up having usage surprise you on those stocks reports. And it's a price argument because prices are so cheap. You know what I mean? So I'm just saying you could also get something less than expected and get that bullish little pop, but then it's still like, okay, well, if I'm concerned about running out of beer and I have 9 left instead of 10, kind of surprised me at first, but I think I'm okay. You know what I mean? It's just not a super big concern. What was your question?
You're talking about these 4 to 8 cent put options on corn. Unless you do something shorter dated, they're going to have to be a pretty good rally in order to get anything even close to 370 or 380 for strikes.
Yeah. Well, we can talk about some short-dated stuff too if somebody wants to do it even cheaper. But the point would be, and maybe go to July, but I mean, the point is, if we get this crop planted and acres are there, and everything's going well, what's going to keep the market supported? You know what I mean? I'm talking in 6 weeks from now. So I'm just saying then we may not have this, then we're going to be talking buying 330 and 340 strike prices, not something better. Or lower even.
Is there any concern that the funds are short and if we get any type of problem, you go way past 450?
But that's where this put argument makes more sense. To
They're
do
not
that.
that short though.
Historically
Not long,
speaking,
shorter than they were
Well, yeah,
in-
it's starting to,
at the low.
I mean, if
But
you
you
put
follow-
200,000 contracts on,
But my answer to that question in terms of what, I'm very strictly answering your question. If that's your concern, so you buy puts.
and not
Because
so
you got the upside.
then the concern back would be, Turner says, well, then why do we buy puts? What if we think it's going to go higher?
But that's not what we're saying. You're saying, what if there's a chance? And what are the chances?
And then we
I
get to
agree
the end
with
of the
you.
year and
And the answer to that question is saying, well, I'm not scared to weigh these risks and put 10 cents in a put.
right. What
Because I don't want to
would-
have $3 cash corn because I was waiting for 5.
right. And what I
That's
run
it. That's the
into-
end of the conversation.
So what
What I-
happens? What's the conversation at the end when you spend?
Because if it goes up,
$20,000?
that if it goes up to $5, you'll add another $300,000 to your bottom line as a farmer.
No,
And if
I-
it doesn't, you don't lose the $200,000 that you're going to lose that we're going to gain on these puts. Does that make sense? So I mean that's directly, I think, taking
I
on that.
agree,
that
but how
idea.
many times have we all bought puts and we say, well, we hope these go to zero, we hope the price goes higher. The guy at the end of the year says, you should cost me 30 grand in puts.
Then I would say you probably messed up buying those puts,
Then we'll just,
right?
Yep.
The markets went. I'll say it again. We lost over $1 in the market the last 3 years. If you bought puts at this time and the right time, and you got out of them, you made a lot of money. And you can go back to the recommendation we gave in regards to we were still scared of more downside, and we did the 320 and 280 put thing. I mean, I know people didn't want to lose that money, but I'm damn glad we did that instead of selling some corn. Because if it would have slammed lower, that was the whole reason that came up. This is an alternative to selling now if people are panicking and scared. I always would love to lose 10 cents in puts if the market rallies $1. And I hope we lose money in these puts now. I hope and pray we lose money and we get the opportunity to sell corn at $5 as long as their yields are there. So,
falls way out of bed.
I mean, to me, it's focusing on. I only have 9 beers instead of 10. You know what I mean? It's a small focus to worry about that. I mean, it still comes back to this is why we have a plan. This is the whole picture. And if we don't have this stuff protected, and I think on the flip side, so the other side of that question would be, what if I'm already 100% sold? And I don't work with that many guys. I had at least one customer, we were over 100% sold for 15 through cash and some futures, and we got the hell out of the futures when we dropped below $4 last night. So now he's not anymore. You know, and some of that was just cash sales and we had targets and they got hit and double filled and just sat with it. But we're not talking about an egregious amount more, but at 100% instead of being at 70% of insurance. So, I mean, it's all in a balance. But if somebody's heavily sold cash, and it would have been smart to do so, because you could have probably done it at $6 a couple of years ago for this crop, right? If you're in that scenario, would you be buying calls or ready to on a break around planting season? You know what I mean? Hell yeah. But it's just the scenario the customer's in. So if a commonplace for a customer right now is that we're 20 to 25% sold, this is who we're talking about focusing on these puts. Unless they want to get some more on, and I know we could have a target at 430 or 440 or 450, and yeah, that can get hit on Monday. But the put's a factor of just getting that floor underneath it, because we have downside risk of $3. So absolutely we can lose money, and in most instances if we do, that's a good thing. But it depends on if we're buying puts at the bottom of the move or the top. And right now, from the seasonal perspective, we're still at the top. If we're, I guess where we settled today, about right at 415.
Yeah.
Did we get over 420 or just 419 was high?
3/4.
419 and 3/4.
And I didn't have 420 right out there, but yeah.
I did have some orders at 419. Got them. So, any questions? So let's talk about it more in the morning. In the morning and get some orders because we don't have that much time before Monday. But are you guys following me? I mean, this is where you just get on the spreadsheet, you get the focus of the whole farm, and you don't take those risks. I mean, Amos is talking about what the farmers are going to say, the guys that won't want to do it. But you got to say, look, you got crop insurance for a reason. This is the same reason. If we're scared to sell here, and I still weigh this year, it seems smarter to go heavier in puts than it does to go to 70% sold. Just because we're here, we're not at $6 and we're not at $5, like we were in some of the last 3 years at this time of year. You know what I mean? We're down at a lower level with current projected carryouts at around 1.6 billion with normal yields. You got to look at 2 factors. Demand still can surprise you because prices are lower from recent history. That can be something that changes. And the other thing is still lost acreage. And we could still have that lost acreage. This is just saying let's be very strict and let's respect economics and let's look at it from that perspective and nothing more. But we could also end up seeing lower acreage on that June report. That could come back, and that's why, I'm saying be a little more heavier to puts versus saying, yeah, maybe we need to just, and I'm not discounting the seasonal program or anything like that. I mean, if you have 25% sold and you're selling seasonal to get you to 50% sold, I'm saying treat that as 50% argument, not something else. You follow what I'm saying? But go and get that, whether it's the 20 to 30% uninsured or whether it's 50% of total production and puts, and we'll throw something out for the LDP suggestion. Probably to get filled. So we'll say here's what we think will get filled, and then here's probably a wish number that's a good probability that could get filled on Monday after the report comes out or Tuesday. So I think it's here, and I think if we have a good crop year, then I don't think where's acreage going to be next year? 85. I'll be more optimistic than next year, but we got to respect that we're around $4, not 5 or 6. So that's why you still may lean a little towards more puts and 50% puts this year versus, maybe I would have suggested only 25% for somebody before. And the LDP thing is what it is. It's a very low insurance thing. Low cost insurance item is a thought, nothing more. If you lose it, so be it. But the point is, if you end up making money on it, you need it. Especially now, right?
Pulled up the options, so that's a December 340s, 350s. We're trading 6 to 8 cents right now.
As far as the LDPs.
Well, you were talking 6 to 8 cents. I don't know what is all.
350, 340, probably 340. You know, and even, what was
Or what were
the,
you talking
what was the
about?
340 put at? I just.
I mean, I didn't know if I missed, like, you were talking about spending more money on
It said
puts.
have orders put in for other ones to get hit.
Did we hit 5 cents on the 340? Overnight or is that the range
It's
here?
unchanged. It was 6.5. Unchanged.
But I mean, you know what I mean, when we were up.
I don't know if it would have been.
Probably
I
didn't
don't
trade
know.
as much.
Like on something, I don't
But to
know.
me, though, anything, that's the area I think you look at for the LVP side.
If you pop a little.
And maybe 350 at 5.5, 5.5 or 6 if it tops.
After 4, get some ball
You know, but as far as, you know, as far as regular puts though, I mean, obviously ideally I'd like to buy a $4 for 20 cents or so. You know, that type of thing I think would be possible on Monday.
You could buy a $4 July short dated for 14.5 today. Which gets you through the end of July. Or, sorry, that was in August, end of July. So I get you through both reports and July.
So wait, and this might be not a bad time to look at some of those. This is the ones off the December or off the, were you looking at any of those deeds? Because I mean, really, you think, common sense is here, we're gonna get this crop planted at a good time, and we're gonna do it in good condition. And, you know, you got a lot of downside between now and mid-June. And, you know, I'll just say, for instance, if we clock in at somewhere in a 340, 350 area on December by the June report, or especially before the June acreage report, you know, I sure as hell don't want to be bearish anymore, if that's the scenario. So I mean, that's the time frame. Meaning we'll come back into that acreage report, I think, no matter what, and just from a weather perspective, it's like, why would you bury it before your pollination period? So, but yeah, let's look at some of those. I think those are good ideas.
I was looking more at the short dated beans though, to try to get something affordable for a foot. You said you look at which ones were 14 to September?
I thought, well, they actually have them all months now.
Oh, they do?
April, May, June, July, August, September. I didn't either. But I looked at the August because that gets you through
Right.
the June report.
All right, then. I'll take a look at those.
Obviously cattle hogs spread got pretty damn wide on nearby, but it's kind of hard to take advantage or trade that stuff because in June hogs is $15 higher than April. Definitely in a good area to get something on for cow calf guys as far as with the feeders rally to get some kind of protection on there. Hogs and cattle obviously just trade our margin sheet. What does it say now? You know what I mean? Just don't say play the margin game. Basis. Did Columbus jump on or not?
It sounded like they were in the background.
You know, that's still a hell of a market that's going to have a hell of a range this year because, you know, not only do we have a chance for the board to wash out, I mean, just the high risk that the basis washes out. I mean, we talked about this time frame even by June or July. If it looks like crop's going to be great, you know, it's just going to go to hell. That can go pretty fast. So that's still something to remember during this good basis. The good basis we're going to have now to get caught up or even get future basis locked up. The guy's going to wait towards the end of the year because there's still a big risk on basis too. Yeah. Just, we've talked about this before. So just some really good prices out there, right? Cash wise?
And I've mentioned it a few times in the rec sheet, if you've got HGAs that you've rolled out to July and this upfront basis, you can go now or have somebody haul it for you during planting time, you know, in April, May. This total bird in the hand thing, you can bring your Julys back up front and deliver it now and don't worry about trying to get better basis in June, July. So I'm sure commercials do that too, so we probably have a better chance now at good basis in June, July than we did before, but I just think there's still gonna be too much coming off farm late season.
So anything else on, so same thing we say a lot of these meetings, right? Review, the plans, talk about, decide later, getting these options on, really what's the risk. I still though always like, why not spend another 4 cents, forget the shit, because short dated stuff is less liquid. I mean, it just, not that it won't make sense. It's less liquid. They're going to end up trading another commission to get something else on afterwards. There's all these things where the customer may say, yeah, I'll just spend 4 or 5 more cents and just make sure I have this protection on, because it's really disaster protection.
That's what I was trying. I thought that would be good if we got them in one and then rolled over.
I think it's a good, but it still would maybe pay off for them, because timing wise, in a bigger picture, I think it's smart, but you're still then needing all these timing pieces to come together. But yeah, in the bigger picture, we take profits by first week in June and make money on those, and the market bounces, and we get a nice December put on underneath it at the same strike for, you know what I mean? So you can maybe have a good timing scenario, and that actually is the best thing you can do. So I don't think there's anything wrong with it at all, but those are just the other considerations for it. Sales, what we just talked about, great sales material. Great sales material, timeliness. Let's get an account open and let's get started. If you don't want to do risk management this year, let's get started and get some of these options on. It's a great sales. It's great sales.
And get an ACH form if you're signing up to a brokerage.
Yeah.
What do you mean?
Well, if they don't send a check in, then John gets all pissed off because RGO doesn't like you putting on zero balance trading, and then it takes 5 days for the check
I
to
thought
come
your
in.
customers don't have margin calls.
Just when I put stuff on. You have to have margin to put something on. I don't lose money.
Just the initial.
Yeah.
Much,
Gotta pay to play.
very good point. Much easier to get something with the ECHs, yes. So, but talk about sales a little bit.
Just kind of echo that, what Dave just said, and then, just right now, it's a lot of rinse and repeat from what we talked about before, but, got to talk to guys about risk, and then you got to talk to guys about opportunity, and when you're dealing with that type of range out there right now, there's a lot of different things that can happen and swing the net revenue of the farm, quite a bit. So, it's like a guy signed up, that I got signed up yesterday. He says, I'm going with you guys because I need some more options, and he was talking about options, but, I always use the term avenues, to do things. So I think having the ability to go out and show guys, we can work with you on your cash stuff. If there's uncertainty out there right now, it all goes back to, we don't even have a kernel planted yet, so the things that they're probably going to want to do are things on paper. So we've got the ability to do that, manage your cash, comprehensive marketing program, 2016 price cycles, coming in here, and all those things are probably leading into it as far as discouraging production or maybe even having production problems not realized. So those are things that we can do as far as protection without committing you for delivery. So, just talking about those different opportunities, and push for risk management, but, get the account open, if we possibly can, but, just really, you can't not identify the risk, but you can't doom and gloom them to the point where they say, well, I'll just sell it then, if it's going to do nothing but go down. So you got to talk about both sides, and that's why we're here. We're not market predictors, we're risk managers. Build a good position, move into the year, always be ready to shift on the fly. That's why we have the spreadsheet, that's why we have the program, that's why we're talking to you on a weekly basis, and let's just roll with it. And the big thing right now with guys is, if there's 10% of you that feels like you want to do this, then you might as well do it, because the last thing we want to do is be talking to you at this exact same time next year with no track record to go off of. If there's any part of you that sees this could be benefit, this is the year to do it, because in the 10 years I've been doing this, margins have never been this tight. It's just here, we're here where we are. We're 0.5% of the cost of production in most cases. We're responsible for 50% of the revenue at the minimum. Why wouldn't you take on some management right now versus wait and see, and then you can't do it later, or, we're talking about things, well, this is what we would have done in the next year. Let's just do it now and then make us prove ourselves to you. So that's probably the talking points.
And the guy that Clint signed up yesterday, and I've said this a million times, but Clint met with this guy in 2012, I think. And I asked Clint, because this guy was called again by a caller, just because I tell the callers, I don't care what the act says, call them anyways. I don't care what the notes say, call them again. But I asked Clint, would you have thought this guy would have signed up after the first meeting? And Clint said no. Every season is different, guy. Every year is different. It doesn't matter. Call them again. If you've met with the guys before, they didn't sign up and you didn't think you had a chance in hell, try again anyways.
Every day's different, every week's different. But,
Every season's
but don't
different,
just
every
call
year's
somebody the
different.
next day if they tell you that.
You gotta call it, catch them on a week.
That upsets me.
Yeah.
I know today.
But it is right. You know, but you don't know if a guy's a bad day or whatever, and
Or a bad year.
Well,
Every year's
the
different.
2012 guys that told you to screw off, well, those guys were coming off the best margins they've ever seen,
Exactly.
so obviously they were pretty cocky back then.
Yeah.
and he thought about it after you guys called him, and he felt sorry for. He said, "Stop calling me to help on you." They thought about it and they were sorry.
So yeah, the thought process of the guys in 2012, well, that sure isn't there now.
So it's just, continue to focus on the risk management side of it, get realistic expectations going into the thing. But like I said, if there's any part of you that sees that this would be beneficial to you, then we might as well give it a try. I guarantee you, we are not going to be able to, because we don't have power of attorney and, all this, and, to do things without, we're not going to be the mistake that, bankrupts the farm. The not working with us could cause that, and that's what a lot of guys are coming off of last year.
And,
So-
and this, and again, and I know we just talked about not having another commissioner name. I said, well, that's what we want to do, right? But this is still the time for our business to make money, though, guys, because we're not going to look. There's going to be times, years where trades make sense, times they don't. And we're not going to do it just because it make, just to try to get commissions out of it. We're doing it because this is the right time seasonally to get this stuff done. Because, as I just said before, if we're 50 cents lower, I'm not going to be sitting there going, we need to get puts on, or maybe if guys don't have any coverage on, you say, well, that's the only thing you can do. But we'd rather do things at a time where we want to do it, not where, because it's the only thing we can do. You know what I mean? So it's the best, it's the most beneficial time for you and the customer to get this stuff done, which is why we're kind of making an extra point of it here. And I mean, lawn's not analysis, although sometimes it's hard to follow, or too, what's that word? Too common sense, too much common sense. But I mean, what he's saying just makes sense. The market's kind of saying, hey, the weather outlooks look reasonably good. Planning's probably gonna get done. Still looks like we're gonna get this acreage in, but let's get covered shorts. People didn't want to press it, and now the market's climbing higher and short to demand. Ethanol plants, et cetera, want to get that damn corn bought and make sure they have it bought so they're not chasing it when everybody's in the field in a couple weeks. So that's part of this lift here. And a knee-jerk reaction to the report potentially on Monday. And after that, if weather looks good, planning goes good. I mean, there's nothing but a kind of a sinkhole for the next couple months in the market. So that's why I'm making a bigger exclamation point about, hey, I was a little surprised with that sell-off, weren't you guys? I mean, we almost were going to take out 390 in these corn at the time when we did it. Now we're back where we were. So it's just another reason, hey, these little retracement back opportunities are usually a 2 to 3 day deal sometimes in markets like this. Because if that acreage report happens to be the other way, she's gone. So, like I said, we'll put out some option things on both sides of the coin, but it's still ultimately the customer's decision that you work with them. Hey, do we want to just get 20% on of puts? Let's just get it on before the report, or if you want to wait till afterwards and just have decisions distinct. Because at the end of the day, it's not a big, we're talking of pennies. It's not a big cost difference. Meaning, go to the market after the report no matter what, or get them on that day no matter what. You know what I mean? Make those decisions and then follow through. Make sense? And same thing with the wish orders. So, wishes can come true on report days, and they can only be there for 5 or 10 minutes sometimes. Sometimes 30 seconds, right?
3 out of the last 5 years, we haven't recovered the price from the report day in the entire month after it. So
Let's write that down. Let's get
I
a.
think
I know.
I sent a graphic out today.
No, I did 5 of the last 5.
Or 5? Is it 5 of
All 5
All
of
5 last year's, yeah. The price action is the week. The week didn't recover the whole day. So there you go. So be ready.
Yeah, I was thinking wheat was looking like a pile of crap. I was looking at trade late, and it kind of fell apart. But it's kind of down here.
Well, most of my guys are ripping it up anyway, so it's not like I have any to sell.
So, all right. Anything else, guys? Have a good day.
After you.